Hi everybody, this is Tora and Patricia, and we're back with another episode of Outvise Insights, a podcast by freelance talent marketplace Outvise. Here we discuss trending topics within business, technology, and the future of work. Today our topic is what is happening to the fintech bubble, with guest speaker Tristan Pelloux. Tristan is a management consultant passionate about fintech and innovation. He has launched and runs two ventures, StrategyY, an independent management consulting firm, and FintechReview, an online media centered around the fintech industry. Thanks for joining us, Tristan. So good to have someone in the studio for once. How are you doing today?
Thanks for having me. Yeah, it's really great to be physically doing a podcast. It's really exciting.
Yeah. And Patricia, how are you doing today?
Fine. Happy to have Tristan here with us.
Yeah, it's great. So we're talking fintech today, but before we start, Tristan, how about you tell us a bit about yourself and a bit about what gave rise to your fintech passion?
Yeah, sure. So before launching my ventures and also moving to Barcelona, I was during 6 years in London working in corporate strategy and corporate finance at Virgin Money. And over the years, I've done lots of different projects, but I very quickly kind of focused on innovation in financial services. Before we were all calling it fintech, it was just about okay, let's use a cool technology to do something about financial services. And so I got super interested in innovation, and then My role focused more and more on developing strategic partnerships with fintechs. And so I was spending a lot of time thinking about what was going on. And that led me to launch FintechReview to kind of channel all my brain activity about fintech into one online media.
Cool, very interesting.
You are almost in fintech by accident, no? Let's say.
Yeah, exactly. Because I started working corporate strategy in financial services wasn't my plan. Well, I guess no one has a life plan but work, but it was my first job out of uni. And so over time, I got super interested in innovation. And then fintech became big at the same time, because I'm talking about early 2015, and then really you started to have the Revolut, all the big fintechs of today really started around these years to really power up and scale.
Funny enough, I was working at that time for a company, for a digital agency in the UK, and actually Revolut was one of our clients. Well, and so what did bring you to Barcelona?
Well, London is a great place, and it was great in my 20s, first years of experience, but I was tired of the bad weather and the worst food. And it was time to have a better lifestyle. And I thought, I can work more or less from anywhere, so why not going to Barcelona? And my wife had studied here. My brother has a restaurant here, so we said, let's come to Barcelona. And I'm very happy that I've moved.
Good. So let's go back to the financial market. It's going through a rough patch right now. A report from the Financial Times claimed that almost $1 trillion has been wiped from the valuation of fintech companies. Can you tell us what exactly is happening to fintechs? What are the main factors driving this?
I think overall expectations of the, let's call the economic future, have changed materially over the past few months. In fintech and beyond, it's just that, inflation is super high, so interest rates are going up, so a recession is most probably coming. And at the same time, it meant that there's less available capital for fintechs. So it's kind of the end of the free money period. So investors look more carefully at what the companies are actually doing, rather than one day I'll make money and I'll make a profit. Don't worry. Now investors are worrying a bit more. I think it's a tough time for a lot of fintechs that haven't really figured out a proper business model. So they were focused on growth, on acquiring customers, but not really focusing on, can I actually make money out of these customers on a long-term basis. And a lot of companies are in this, as you say, rough patch of figuring out, okay, now how do I build a real business?
And so Tristan, the high-profile company Klarna, which we all know, recently raised 800 million in a funding round that put its valuation at 6.7 billion, which actually was an 85% drop from its valuation in 2021. So taking this Klarna case, would you say that there are certain fintechs that are hit especially hard, and will some markets fare better than others?
It's particularly hard for this kind of scale-ups that have grown a lot over the past few years, because there was a lot of available funding, so they were really going hard at acquiring customers. But now that it's much harder to fundraise, they have to decide if the problem is that because they're not sustainable and they're losing a lot of money, they are forced to fundraise, which was fine for the past, let's say, 10 years. It was fine. You need more money, and you just go, and investors are going to pitch in. But this time around, it's a bit harder, and investors, as I said, are a bit more cautious about the future. So for Klarna, they took the hard decision of a down round, but it was that or going under. But I think it's particularly hard for this what we call blitz, like the startups that have been blitz scaling, which is like a theory. I think it's from the founder of LinkedIn, that you just you grow faster, and basically you grow your operations faster than your revenues, because you're going to catch up eventually. So a lot of companies have done that, but actually are not catching up. And I think, at least Klarna, they were able to fundraise. A lot of companies actually are not going to be able to fundraise, and they will have to cut costs and try to break even much faster than they would have planned.
Okay.
Do you think any good can come out of that?
Yes, I think it's actually great for the fintech environment, the fintech industry, because it's a big cleanup. Is that suddenly you go from, okay, everybody can fundraise, everybody can start a company, and I'm going to launch a neobank, and who cares if it's not profitable ever? And now it's much more. The strong businesses are going to come on top. If you look at businesses like Wise, formerly known as TransferWise, they've been very quickly profitable, and now they're growing super strong over the past year. But they are profitable. They don't have this pressure. They were profitable. They went and they did a listing, and they are the example of a strong business model, because they thought about it carefully. But then you have lots of companies that shouldn't even be here because there is no market. When I look at, as I said, like neobanks focused on big cities, on like the same segments. I'm like, how do you think that everybody can survive? It's like the amount of money you can make out of a retail client in metropolitan cities is very, very small, especially if everybody tries to get this same amount. I think it's going to be a good cleanup, which is great. There will be also less investors, which there were lots of tourists. So it's going to be also great for the industry. And I think lots of companies will come out strong out of this rough patch.
Yeah, and I think at the end, who benefits the most is the end user, no? I suppose we will also see some partnerships between startups and incumbents, because at the end, big players will benefit, no, from startup knowledge. So.
Yeah, no, definitely. I think it's a good thing for banks this environment, because higher interest rates mean better margins for them. So because they get cheap funding in any cases, they get current accounts, and they lend at a much higher rate at the moment. So it's great for their margins, and because they have larger funding bases, they're going to be much stronger now in the next few years than they were over the last years. Especially if a few fintechs go down, then it's less competition. I think partnerships. Well, obviously that's what I was doing when I was in London. I think it makes a lot of sense for many reasons. Because banks are not good at a lot of things, especially developing products and innovative solutions. So doing a partnership with a fintech, for instance, where they provide their technology or their services, everybody wins. But it's also tough for a fintech to approach a bank and develop a partnership. I can tell you from experience.
No, it's the other way
time.
around. They come to you when they are convinced that they need you. Yeah. I also feel that transparency is one of that positive trends that will probably come out, because traditional banks got better at providing real-time transaction info, but I think it makes sense for the financial services to follow this trend.
Yeah, I think greater transparency around fees, around interest rates provided. I think a lot of innovation like open banking also is providing more transparency. Information is flowing more from the providers to the end users. There's still quite a bit of things to do, but I think technology is helping to provide this transparency and better information about your financial situation. Now most banks and most neobanks provide a dashboard telling you where you spend your money, which is helping your everyday person to manage their personal finance much better.
Right.
Yeah. So Tristan, actually you kind of already answered this question, but is there anything else you can add to what will happen to fintech companies? I'm thinking consolidation or shutdown. What will happen to most of them? Anything else you want to add to there?
Shutdown will happen
to a lot of them.
Yeah, I mean, you see, these days obviously like lots of crypto exchanges are collapsing, but this is probably a different story. But you will also see, I guess, some shutdowns from businesses that failed to adapt to sustainable business models. And for me, what I see is mostly the retail-focused fintechs, where I don't see like how can they make money like on a long-term basis. Also, banking as a service providers, they were very trendy, and there are a lot of them, in my opinion. But same, like the margins are not super high, and the demand is not high as well. And regulators are looking more and more at these companies, like what they do, who are they providing their license to. So this mini crackdown is gonna put a lot of this business out of business. We might see some consolidation happen. I could see like banks snapping up like some fintechs because they're cheaper now, and also like consolidation within some industry verticals. Yeah, could happen.
Yeah, the cycle is obviously not new. No, this is something that is happening from time to time. But do you think fintech companies and investors should be worried?
I think some are already worried. I mean, they probably have been worried for the past 6 months when they've been told, "Hey, no, you can't raise this big fund round anymore." So I think a lot of them, the ones that should be worried, are already worried, I would say. but not all of them. I think some are in very good positions and they can sustain this tough period. I think investors are worried for sure because they have to. Well, like the thing is, big failures mean big write-downs in their portfolios, and also they're a bit more cautious when they invest now, especially in fintech. But there are still like good ideas in early stages, and investors will still look to back good founders with great ideas. But yeah, I don't think everybody's worried. But yeah, I think some companies should definitely be worried here.
So what can fintechs do? Or if they didn't have any action plan for that situation, how can they act now as fast as possible?
Yes, I think it's a big review of their raison d'être. It's like, what are they doing? Why are they doing it? And if we focus strategically on things that you do well, you can be profitable in that niche.
Come to basics, no?
Yeah, and then super tough execution on this is our path to profitability. It's probably going to involve like a bit of restructuring and getting rid of some jobs because, as I said, some have grown their ops like so much in such a little time that now they need to review a bit and this is our business, this is our cost base. Our cost base need to match much better our business. So yeah, I mean, big strategic reviews, cost cutting most probably, trying to find investors that still want to back them, explaining them like carefully what the rationale in what the path to profitability is. And I don't think there are many other solutions. And for the ones that are fine, like Wise, well, they continue to execute and they continue to grab market share, and I think they will become bigger and bigger.
So it's not different really from one market to another. I mean, it really depends on how well your business model is actually doing or was doing before the funds were cut.
Yeah. I think some business lines are going to have a really hard time. Like, for instance, fintech lenders, because now they have to borrow at a much higher rate, and which means that they need to apply this higher rate to their clients, but their clients can get a better rate from incumbents. So this kind of business models which were fine when there was free money or very cheap money. Now it's really hard. And same, like, also because the economy is deteriorating. So if you're lending, it's not great because your portfolio is gonna deteriorate and losses are gonna pile up. So yeah, I mean, some business models are obviously more at risk than others.
Yeah.
So Tristan, looking to the future, how long will the current slump in fintech last, do you think?
I think it will last as long as the economy is in a bit of this rough patch. So I think once the cleanup is a bit finished and some have gone down and there has been some consolidation, at that point, well, it will be much better because you will have only the strong ones that have remained. And maybe at that point the economy has turned a bit better. Maybe not. Maybe we're in for a multi-year recession. Who knows? But I think it will be like that. At the same time, on the investor side, some will be wiped out as well because they will have lost quite a lot of money, and their limited partners will say, "Hey, I gave you a lot of money to invest in startups and you've made only bad bets." And so it will clean up both sides. And then at that point in time, then you have like strong investors, strong fintech companies, and then this is where you continue like moving on and innovating. But it will take a bit of time.
Again, eh?
Yes, but I would say it will take. I mean, probably at least to have like a clearer picture, at least a year or two.
Okay.
So, are there any key takeaways you'd like to share with us?
Key takeaways. I mean, for companies, as I said, like focusing on. I think it's super important to focus a bit more on. It doesn't need to be profitable from day one, but at least have a clear path, and being able to explain this path. And this is a credible story to investors, saying, oh, "Okay, I need funding now, but in a year I'll be making money because I'll break even because this is a path. This is what I'm going to do." And also focusing on not by saying I'm going to offer all the products in the world and this is how I'm going to get it. So yeah, my takeaway is strategic focus. Ideally, kind of a blue ocean strategy. So going after markets that are not served well, or creating your own market rather than a red ocean strategy where you go and fight for the same clients and the differences are, I mean, to really gain customers, it's going to be super expensive. So I think, strategic focus, a blue ocean strategy. That's already like quite a good plan. And I think most companies will never execute that. So
yeah, right. Work smarter and not harder, no?
Yeah, exactly.
Well, thank you so much, Tristan. This has been a great session. I think that's all we have for today.
Yeah, right. Thank you very much for being here with us today, Tristan.
Thanks for having me. It was a great chat.
Thanks for tuning in to Outvise Insights. If you want to hire freelancers or find your next project, head over to outvise.com. See you next time.